Welcome to another episode of the Crypto Spendthrift Podcast. Alright, going on in with the first article of a Japanese firm, Fujitsu, is eyeing cryptocurrency trading with cross-blockchain payment technology. So this technology is going to be similar to another thing we're going to talk about, which is the Lightning Network's atomic swaps. So what this Japanese firm is doing is enabling easier swapping between coins, a smart contract type deal. And with theirs, they'll be kind of merged into a single transaction, and the transaction ID will still shown on the individual blockchains of each coin. So this is still very, very infant technology. Probably won't be out for a long time, but interesting concept. I kind of wonder how they're gonna have the transaction ID show on each blockchain, like each individual thing. That being possible kind of perplexed me, but we'll see. Next up is something that's not on, that won't be on the kind of topic list, but just want to open up with the whole Bitcoin gold thing. Just a small little kind of, not really announcement, more like PSA with Bitcoin Gold having the wallet issues that I think either the wallet steals all your Bitcoin Gold, or it also somehow, I think it also either infected sites using Google Analytics or something, or that's how it attacked and looked for private keys. It was weird though, because it's a web wallet. One of them was a web wallet, but just don't mess around with Bitcoin Gold for a while. It was terrible launch, and then it has these issues, these hacker issues. People are saying, well, some are saying it was the devs themselves. We won't know for a while, but crypto's the Wild West, so keep the lookout, and being the first on wallets is not always good. Definitely want to have other people test them out, test the waters out. So next up, after that little PSA, we're going to talk about how a brokerage chief feels like Bitcoin's futures should be quarantined. Why? Because margin trading can put an entire clearinghouse in a predicament where they're out of money, basically, because large swings being traded on margin. Well, because crypto's volatile, and people can have a dumb amount of margin. I mean leverage, and in a mass liquidation event that would happen to like GDAX, could end up wiping the whole cryptocurrency side of the fund and force them to pay using other product funds, which could put the organization in hot water. So that's really why that brokerage chief was really opposed to the idea of Bitcoin futures being paired along with traditional offerings. They basically saying they should have their own like separate pool of money, I guess, to kind of like isolate them from everything else. However, there's Swiss firms that are going the kind of opposite way, and they're allowing people to do future trading either now or very soon. But it's going to be mini futures, which will be fraction of the worth of the normal futures. So it's an interesting situation to think crypto destroying the global economy in a way of people margin trading and being way too leveraged, and then a volatile swing just knocks it all out. This is a very real fear, though, I think, because this Tether situation would be the thing, or a similar catalyst that would end up causing this mass economic issue that would go down. But we're saving Tether for another day, maybe in an article, or maybe just a news report when it eventually blows up, because Tether is real suspicious, honestly. Next up, governments are showing interest in firms that do chain analysis, but they're really interested in Monero and Zcash. Why? Because as I've been harping usually, is Bitcoin is really garbage for being anonymous. Zcash is decent, I guess, but the king of on non-coin goes to Monero. And if you don't really know much about it, it's because Monero has this confidential transaction mechanic that once you send coins off, they're totally anonymous. It's just the transaction is unseen. It's like those coin tumblers on steroids, basically. You can't track it. It's basically near impossible with current technology. Maybe there'll be new, innovative ways to track it, but right now it's impossible to track by anybody. Meanwhile, Bitcoin, public ledger, transactions are straightforward. It's trackable. But yeah, governments are real interested in this because, as I've been saying, is people in the dark web are gonna move over from Bitcoin to Monero as it becomes more and more apparent that these chain analysis companies are gonna be more commonplace, especially once Bitcoin gets more adopted and the IRS wants to know who is utilizing Bitcoin. So expect Monero to keep on growing. Next up is Lightning only. Scaling Bitcoin could require another layer. So Bitcoin has the potential to scale even farther than the Lightning Network. This Lightning group actually proposed this idea of channel groups that basically this group of people, they're unspecific about the number that could work with this, but right now it's either 2 to unlimited, but obviously their thing is going to be lower than unlimited. So these channel groups basically enable some kind of off-chain transaction hopping between the group members. I didn't really read the specifics of it, but I'm guessing instead of like miner facilitating, it's kind of a node facilitating between the people who you've kind of approved of as good people to allow the transactions to be confirmed by, or something like that. I don't know. Like I said, I just read the general thing about it. Didn't really care too much about it because the fact that channel groups would be probably 5-10 years down the line or something, considering Lightning Network isn't even fully functioning right now. So channel groups won't come for a while. So this scaling solution really is relevant until Lightning gets completed. Ripple is shooting up after an AMEX deal and a secret bank meeting. So Ripple's trying to cement itself as the go-to for banks, even if some of these banks are creating their own platforms. Stellar's gonna have to step up to the plate because Ripple's really going hard on the big money side. And unless they have a lawsuit going on or something. So unless that really impedes Ripple soon, they're gonna be the main one for clearing settlements between banks and such. YouTube stars can earn BAT tokens now. I've been using the Brave browser for a few days now. Decent browser. It's taking some time to get used to. It's basically Chrome in a way. I think it's a Chromium fork. Anyway, so the way Brave system works with their BAT tokens is all ads are blocked on Brave, so you don't need ad block. So no ad blocker plus, even if that's kind of trash. No uBlock origins, which is really good. But Brave already has it all built in. Block ads, block trackers, even block fingerprints of your browser. A lot of cool privacy options available. And they're utilizing their BAT to credit websites. This is completely optional, but you create websites based on time usage rather than just seeing ads or whatever. The main thing is this could be good if people actually use Brave and use BAT. Otherwise, it won't go anywhere. But I think once people really start using Brave, it'll probably go somewhere because it's not a bad browser experience. I actually quite like it. Not really. I can't really give a full review of Brave browser yet, but I'm definitely liking it more than Chrome. Not sure if I like it more than Firefox yet, but that's mainly just because I've been using Firefox way longer than either of the other two. I'm gonna have to add more extensions to this Brave browser before I have any judgment. Next up is a survey saying most people won't sell their Bitcoins until it's like 200,000. So if you were wondering why Bitcoin's growth is being fueled, it's because these people are true holders. Visa is launching the first phase of blockchain bank-to-bank payments. So Visa is one of those that are using its own solution for bank-to-bank transaction issues, not going with Ripple or anything else to kind of do this. So it's a trial that's ongoing and probably quick adoption once proven that it's a thing. So this underlying thing of these companies wanting blockchain tech and not coins along with it, there's been kind of a debate. So I'm kind of eager to see how these company blockchain no coin solutions compare to blockchain plus a coin solution. Next up is the basically EU Council are considering should they regulate crypto. The big argument here is the market's not really mature enough and it might stifle innovation, but all these ICOs are really making people want to move in for some heavy regulations. Well, not heavy maybe, but some regulation to protect the normal people who are getting into crypto and for these scammers to face some actual consequences. There wasn't really a solid answer if the EU is going to start regulations. They're just heavily looking into it. Not sure if this is going to change prices much, but just be aware if you're invested in some kind of EU-based business with crypto. Gox ICO. Karpeles is basically, he's not suggesting it, but he definitely made it an option of Mt. Gox ICO to come and revive the exchange and give people back their money. But it was more like a very low chance probability. But he did basically make an offer from people to buy. Anyone would think $235 million to buy the exchange off him, even if he supposedly has millions in bitcoins that are just waiting to be realized. I don't think anyone would even revive Mt. Gox anyway, and if they tried, that's pretty dumb because they'll always have that association with it running off with money, well, failing with money and being insolvent. Next up, here's the atomic swap article. So Lightning Labs performed atomic swap between Bitcoin and Litecoin, both Segwit-enabled coins, and it showed how you might eventually be able to rely less on centralized exchanges and just swap between coins all on your own. It's definitely a future that crypto needs to head to. Atomic swaps still help enable decentralized exchanges, and these decentralized exchanges where all these crypto hopefully adopt confidential transactions or such to truly be free, I guess. But that's a really idealist will look out. But the benefit of atomic swaps is for you to not have to rely on exchange and risk your coins. If you could swap kind of a user-to-user based, it will work exactly like an exchange. You just wouldn't need them to centrally host your coins when the atomic swap happens in the technology itself already. So good thing to happen, but Lightning Labs really needs to focus on just one thing, I feel, because they're doing a little too much at once that might really slow the greater whole down. And that's it for this Monday. Well, not a lot of cold hard facts going around, but there's tons and tons and tons and rumors going around. As I kind of casually mentioned, Bitcoin Gold and Tether being kind of a Ponzi scheme ish, rumors about that. Just weird time of crypto. The end of the year, I guess people are getting crazy already from the cold. Well, if there's any solid facts from these rumors that appear, or if I decide to investigate these things myself, I'll sure let the listeners know. So see you Thursday on the Crypto Spenther podcast, and you'll get nothing but the news.